Nadadhur is the CFO now joining in. Thanks so much for taking time out. Let's begin with numbers because revenues have declined in the first quarter by about 2% sequentially, and you had hinted that there could be a sharpish recovery in Q2. Is that how it's panning out? Are you witnessing this recovery?
Yeah, hi. Thanks for having me on the show. So yes, we are seeing recovery pretty much in line with what we had projected when we were declaring the Q1 results. In fact, at that time we had said that we may recover. Our Q2 may go back to where Q4 was. So between Q4 and Q1 there was a 2% decline, and we had originally projected that we may go back up to Q4 revenues, but it looks like we may do slightly better than that. So, I mean, it's more or less in line with how we have projected. So we are pretty pleased by how things are shaping up in Q2.
Change so suddenly? Because the general mood point for IT and for specialized IT companies is US is in a slowdown, Europe is not shaping up. You're one amongst the few companies who's coming out and is actually telling us that you're surprised rather than disappointed.
That's right. And part of it may be because of some pent-up demand in both Q4 and Q1, because they were both slower than usual quarters. Q1 was, in fact, as you are aware, was a decline. So some of it may be just pent-up demand for the previous 2 quarters showing up in Q2. And it's kind of hard to visualize. I think like most other companies, I think we will find it hard to project whether this will continue in the next 2 or 3 quarters or not.
Client-specific issues. Overall, what's the sense that you're getting when it comes to client spends for the rest of the year? Are some of the issues now ironed out? If you could just walk us through what the issues were earlier and how they're now shaping up.
A lot of it is to do with discretionary spending, especially in our digital operations business. And because discretionary spending, by the very nature of it, it tends to be lumpy. And that's the first area to get cut whenever there is a slowdown or whenever there is a budget pressure at the client end. So I think for some of the clients, we are seeing that it is getting back slowly to normal. For some of the other clients, they still continue to be very cautious on how they want to spend their funds. So I think maybe we'll have better clarity in Q3 or Q4 as to how 2024 is going to look like.
Enough. What about the digital vertical? Because I understand that one of the pain points there was within that vertical, the retail and e-tail high tech. Is that seeing a bit of weakness? Have you witnessed an improvement?
I think that those two areas still continue to show weakness. However, in the digital business, we have a couple of other areas, luxury and B2B industrial, which are showing a lot of strength. So overall, the digital business is likely to do well in Q2 and hopefully Q3 onwards as well.
You know, the other thing I wanted to talk about is how are you looking to cash in on the generative AI, possibility and opportunities?
So like most other companies, our clients are pretty keen to know what generative AI is all about and how it can work for them. We have 30 odd pilots that are going on with various clients which are in various stages of implementation. A couple of those are successful and maybe ready to get go live in the next 2 or 3 months. So I think we have made a beginning. It kind of remains to be seen how much we are able to capitalize on this and whether the promise of generative AI really comes to fruit. So let's see what happens. But we are investing like all other companies.
Sure. You know, many analysts are seeing a near-term pressure on your margins, and they do expect your FY24 EBITDA to fall below the target range of 28 to 32%. Would you say that's a fair assumption?
Yes, in fact, even in our Q2, in our Q1 results, we had guided that we will come at the slightly below the guided range of 28 to 32. And we think that that is what is likely to be.
You know, the other thing I also wanted to talk about was what about new clients? I know you addressed client additions earlier, but any fresh client additions, and are the new clients scaling up?
there have been fresh client additions in all three businesses, but scale up typically for us is a function of time. So it takes time. Clients want to try out with small deals, and then eventually they scale up once they see that things are working well. So there have been client additions, as I mentioned, and it takes time for these clients to scale up.
All right, fair enough. Just wanted to understand from your outlook in terms of your overall margin as well, projections. What is it that you're expecting? Do you think, I know you gave us clarity about 28 to 32%. That's what you're targeting. But I just wanted to understand further as to what could possibly be the margin levers going down the line.
I think growth generally is one of the biggest levers that we have. So as long as we have growth, especially in the offshore business, that is going to be a positive to margins. And believe it or not, a little bit of attrition is actually good for the industry because it helps you just stabilize the pyramid. Attrition, especially in Q4, Q1, and Q2, has been on the lower side than is the case maybe last year or the year before last. So that is one lever that we have.
All right, thanks so much for joining in and sharing with us your outlook and how business is shaping up, as well as your projections for financials. Tell you what, we'll take a very short break.